Good morning, everybody. It's Hari Swaminathan. Just wanted to give a trade update. Today is Wednesday, September 11th, and let's see how the markets go. The on our GMCR, we are looking really good now. We've got this short strangle at the 82.5 and 85, and as you can see, it's right in between. We still have $2,300 to capture from this short strangle. So already you can see we are up almost $1,100 right here on the short strangle, and we still have 2,300. So now where we stand on GMCR is we pocketed 950 plus 500. So we are in terms of the short strangles, we are up 250. Of course, we have to recover the loss from the long strangle, which has always been the goal of this trade. But hopefully, looks like this week we might be pretty good. So if we look at the analyze graph for Green Mountain, we can see that it's if the stock moves higher, it'll actually be in our favor. So even up to 85, maybe even 86, it'll come in our favor, because we will have a positive delta, and so this will be good. So if it moves up a little bit, that's great. So let's then look at our next position, which is Google. So Google, we did a roll. We did a roll for no cost. So right now we are at 860, 850, and 910, 920. So right now it's at 887. So I think it's fine. We don't need to do anything. We've got only 9 days left for this thing to expire. So yesterday we closed a Costco trade. Costco went up really nice. We made a 40% return in about 2 days. That was very good. So so that was a good close yesterday. MasterCard, we added the bear call yesterday at the 695, 700. MasterCard is looking pretty bullish still. So today it's a little down, but this is in pre-market, of course. But 651, that's fine. So we are still in the middle of our condor as far as MasterCard is concerned. Netflix really zoomed up yesterday based on a new deal with, I believe, Viacom. So what we've done with Netflix so far, so before yesterday, we were up 1550 on Netflix. So 1,550 on my 20 contract position. Yesterday, we rolled the bear call that we had over to the October series, and we didn't recover the entire loss from the bear call. I think we missed out about $250. So let's take that $250 out. So the net position on Netflix as of today is going to be plus 1,300. So we are plus 1,300 on Netflix. Now we also have a nice bull put here, which is doing well. It's got a profit of about 2,100 or so. It's still got about $1,000 worth of premium for the next 9 days. So I'm not inclined to touch it right now. Let's see. I mean, Netflix, could be bullish again, and we might have to roll this 330, 335 over to the 340. If Netflix approaches 320, I think we would want to make that adjustment on Netflix. All right, so yesterday we also brought the Priceline bull put in. So the net position on Priceline, let me just check, is 1,400. So by doing that, we picked up 1,400. So we are plus 1,400 on Priceline. As of now, again, we have 9 days left for this. So it's at 975. Our short on the call side is at 1010. On the put side is at 935. So I think we are decently situated on both on both Priceline as well as MasterCard and Google, which are the iron condors that we have right now. Tesla is interesting. It went down to 159. We had a small profit. The profit was not enough to take the position off, so we left it at as is. And yesterday Tesla went up. Today in the pre-market, it's looking a little down. What we might want to do with Tesla is, you can see that the 140 put has a profit of 5,100. So, and our bear put is a $10 wide spread. So we might want to book this profit of 5,100 or whatever it might be, and open a new short put at the 145. So basically we'll be converting this into a $5 spread. I'm not suggesting that we do this. I'm just giving an idea. I'm just discussing it at this point. So if we did that, we would reduce the risk in terms of the spread. It would be a $5 spread, plus we get to book this profit. So that's important. So on the whole we'll be up. On the whole we'll have an advantage from two ways, by reducing the risk as well as booking the profit. So we'll see. I think we want to see how Tesla moves today, and then take a call on that. The couple of stocks I'm looking at is Apple. Obviously, you can see it's down 23 bucks in the pre-market. So the new iPhone, while it's cheap and everything, I think the market and the analysts think that the impact on Apple's gross margins is going to be quite a bit. So that's why you're seeing weakness in the stock. We'll have to see between today, tomorrow. Let's analyze what's going on with the Apple chart, as well as what the sentiment is, before we try to take a trade on Apple. The other one I'm watching is Chipotle. It's gone up really nicely over the last 1 week or so. So let's take a look. Yep, it's approaching the upper Bollinger Band. So, at this point, I would prefer to put in a bear call at a much higher level. So if we look at the risk profile, the analysis, let's say we're looking at the October series, and on the call side, because it's gone up quite a lot. So on the call side, let's say we go to about, even we can go to about 460, and if we sell a vertical, then I got something else here. Let me take that off. So you can see a $5 spread is giving 67 cents. So that's that's about 13.5%. That's not too bad. That's not too bad at all. And it's at 460. So I highly doubt Chipotle will go up to that level before the October series. So this is actually a very good trade. So I want to actually send this out as a separate trade alert. I will do that. This is a very good trade. It's at the it's at the upper Bollinger Band, so it is going to see some resistance. You can see it's already at a near-term high, and I believe its all-time high is about 430 or 440, so which was made about a year back. So it's going to face resistance there as well. So this bear call actually looks pretty good. So I'm going to put it out as a trade. All right, that's it, folks. I'll speak to you soon. Thank you. Bye-bye.